Hey everyone, Sean Maloney, Digital Business Masters. Hope you're well. Another weekly look at the macro and geopolitical now. It's become very, very political now in terms of how we're operating our digital businesses, and that's a fantastic thing. We've spent many, many years obviously deriding the fiat system, pushing back on the Fed, trying to find ways that we can front run and take advantage of the, let's say, ignorance or complicity of how inflation and interest rates are manipulated. And we've done that predominantly using gold and Bitcoin. More recently, it's now become very, very obvious that Bitcoin is part of that setup as well, which basically means that we can front run even faster. All right. But it's not easy, especially if you're new to this particular industry, or if you've been in it a while and you've gone through this process several times, which we all have. And you can see the cut and thrust of what goes on, a capitulation, and you've got a lot of people, driving prices, and arguably you've got manipulation as well. So all you need to do is step back for 1 second and have a look at why that's being done like that, and learn how to dollar cost average and hodl. They're the two main disciplines. Difficult things to do for sure, but that's how you build it and get ahead of the dynamic. Now, we've been at this a long time at DBM. All right, Digital Business Masters has been around now well over a decade. And we recognized a long, long time ago that we needed to find ways that we could put ourselves in front of the leverage that's available through the ownership of sound money. Let's put it that way. All right, fancy way of saying basically that we put ourselves in a position through interconnected, decentralized, blockchain, Internet 3.0 super systems in a way that we own fundamentals, and we also drive those fundamentals into cash flow. That's really all we do. It's a very, very straightforward process, but it's intense. It takes a lot of management, all right? But that's like any business, yeah? You attract a lot of the retail space, right? Which means you get a lot of people who maybe come across from employed. They've been employed all their lives and they're trying to get into the right-hand side of the cash flow quadrant. So that causes turmoil, that causes challenges. But that's a big reason we set the academy up, so that we can support people in what it takes to move for the right-hand side of the cash flow quadrant. If you've not read that book by Robert Kiyosaki, please do. We're not here to give any financial advice to that end. All right, we can't advise you. We're not you. You have to make your own decisions. It's all about seeking financial education. It's not about, seeking financial advice. Whoever's giving you advice will always set you down one route or the other, and it's become more and more obvious, particularly over the past 6 or 7 years. A lot of the traditional finance advisors don't understand half of what I'm just about to talk about today. They still make a living, okay? They take a fee or they take a wage from the institutions and the banks to advise you to do a certain thing. And if that's all you know, or you trust them implicitly to give you what they think they know, then you're going to go down a certain road in life. If you determine to stand up and research and have a look at some of the things I'm going to talk about today, then you realize there's a complete disparity. There's a very, very big difference between what it is that you may have been taught or led to believe compared to how it really works. And what it really works is in the realms of you being able to get ahead faster, basically. If you've got the fortitude, resilience, education, skills, mindset, that's the difference. So that's why some people run marathons and some people don't. Some people who run marathons will put in what it takes to run a marathon, other people won't. And it's no different in this space. You've got to determine what type of person you are or what type of person you wish to be. So before we go into the big levels, just to remind people, especially if you've not heard this before, everything I'm going to talk about on the geopolitical and macro levels is all fine and dandy, and we live with the interface and the barrage of information every single day, especially at periods of time like we are right now, early 2025. It's all very well having that information. It's all very well listening to YouTubers and influencers and reading books about the skies falling in and everything's a problem and everybody's fault but mine. It's all very well reading all that, but you've got to take that information and then do something productive with it, if you wish to get ahead, of course. So the way we've done that over the years is we've determined that, okay, we need a fundamental, which is predominantly the sound money, gold and Bitcoin. And then we've leveraged the equity from that to deploy into cash flowing activities. You can't run a business just off a balance sheet. You've got to have cash flow. You've got to run a P&L, and you've got to have things working for you, and then you can pay yourself an income, right? So this is not for everybody, and it's certainly not easy. But as the world opens up, as it has done over the past 6, 7, 8 years, you're able to interface more and more and more through relationships, through your knowledge of how these things work, through long-term value propositions. You put yourself in a position whereby you're owning pieces of companies that are built predominantly on the internet and on the blockchain. And then as time goes by, as long as you're doing your job as a digital business owner, respecting the suppliers you're choosing to work with, operating with them as a professional, and knowing that it's not a straight line, knowing there's always problems, because that's what business is, then you're able to keep moving and moving and moving to a point whereby you build up what's called critical mass. And that can operate on a balance sheet and a profit and loss. So you can get critical mass in equity, and you can get critical mass in yield. But it takes time, and it takes fortitude, and it takes resilience. And we're very, very aware of it, especially when you're dealing with a retail space, which have come from employed mindset where everybody, you're looked after through a wage, you're looked after all the time by a boss. In this industry, you're not, you are the boss. So you need to make all these decisions for yourself. But what we've attempted to do over the years is bring that together under one system, okay, called the Academy, where people can work with each other every day to either get mindset support or start thinking about, sophisticated taxation decisions and reallocation decisions and everything in between. Mindset, skills, systems, income, wealth. Yeah, you're going to have all sorts of decisions to make all the time. And sometimes you just need a little bit of an arm around it. Sometimes you just need a little bit of a sounding board. Sometimes you just need to talk to somebody. Because it's a very lonely space, because obviously you're working in your own offices, you're working with your own laptops and computers. You're not going into an office every day. So you need that environment around you. That's how you survive. That's how you survive. And then you thrive. So these 14 different industries are what we've worked hard over a decade now to build up and put ourselves in position of ownership within, whether it's taking income from real estate we own in North America, or solar panel technology we have in South Africa, whether it's gaming platforms being built out of Norway, whether it's trading platforms that operate out of Israel, whether it's health centers and health excellence centers over in North America, whether it's retail, online retail being built out of Dubai, whether it's OTC operating out of the Philippines. There's lots and lots and lots of different things that you can establish relationships with and then work with positively to finish the job and make it a reality in your life. That's how you convert all the things I'm going to talk about now into reality of not just equity, but reliable cash flow income. Yeah. So well done if you've kept going. Well done if you're here listening to this, wanting to keep going. And now we can have a look at the big pictures that allow us to keep up with what it is, because what's happened in the world just over this past 3 months has been quite extraordinary. All right, we'll go there next. Not before we say that in order to connect to what I've just been talking about, you've got various options. Yeah, by far the most powerful are the systems and income subscriptions, because you've got access to the DBM hub, 24/5 access to real people who are doing this in real time, in a full understanding of each of those 14 sectors I've just described. And you can ask as many questions as you want. Every one of those sectors has got its own Telegram channel, and you can ask as much as you want in there and keep yourself on top, especially when things shift and change, which they do. You do. That's just the way it is. Then you've got to think about diversification. You've got to be ahead of it. You've got to be aware of things, what we're doing next. How do we keep going? How do you protect your income? That's what the hub does. And obviously, if you want one-to-one on all that, then you can come in as an income subscriber into the workspaces every single day of the working week. Especially important this week, because we're looking at things, the consequences of things changing, and our ability then to shift so that we can take advantage of other areas of our business to make sure our cash and income is protected, whatever happens. This is how you are successful in business, let alone digital business. In the end, it's all about making sure you understand a very important thing. You can work your fingers to the bone just earning in currency, fiat currency, and hoping that something will happen in life that allows you to get into whatever level of lifestyle you want. You can keep hoping against hope if you want to do that. If you're earning more than $100,000, $150,000 a year, then it's not such a concern. But last time I looked, the average person is earning much less than that in currency when they're working a job. If you're working a job, you seriously need to be looking at this, and you really need to be looking after your kids and grandkids, because a lot of the incomes are going to be falling very rapidly when AI takes control, which is not very far away now. We know 2030 is where they're looking at singularity, but the rate they're going, we'll talk about in the strategy section, the rate they're going now between China and the US in terms of taking ownership of the whole AI super system, which is on top of blockchain, which is on top of the internet, which is on top of robotics. Very, very, very few jobs will exist in the way we understand them today. So the only solution you've really got for your kids and your grandkids, we may be all right as baby boomers and Gen Xers, but in terms of what's going on with the next generations, they need to take ownership. They need to take ownership, not just of the money supply, but also of all the things I've been talking about in terms of where people are using AI, where people are using technology, blockchain especially, and earn an income by allocating proportions of your devaluing fiat currency into cash flowing assets. And that becomes equally important as we look at what's going on in the Eurozone when it comes to the installation of CBDCs, October 2025. Do you really want to be owning that, knowing what you know? Or are you going to be much more savvy and reallocating your fiat into the center of the money supply? Well, that's the big question. That is the big question. That is the big strategy of 2025, actually, is where is that money supply? Well, as of last Friday, we now know that a big proportion of the money supply in terms of the assets that underpin a country's ability to be able to allocate bonds, to create and print currency, to then put society into the position it needs to be, whatever the politicians and the bosses and the banks decide at any one point in time. A big part of that now is going to be built on Bitcoin. So we're in a completely different world now. And you're already seeing that happening across nations already. Australia has just confirmed that today. China are looking at it, no doubt are already well ahead. Yeah. Most nations are well ahead on this. The El Salvador model. Yeah. The European bloc is very much doing the opposite thing. But all that really matters for us is, as we've said for years and years and years, on the gold premise, just look at the gold chart from back in 2018 to 2025 to see this in real life. The value of gold in fiat is much, much higher, almost double. And look at Bitcoin from 2018, just as an example, to 2025. And now look at the consequences of the world reserve currencies putting Bitcoin in as part of their backstop, if you will, in very simple terms. What's the consequences of that going to be to those of us who have accrued Bitcoin for many, many years? On top of that, you've got what's going on with USDT, USDC. If you're listening very carefully to Scott Bessent on Friday, he made it very, very clear that they're going to be protecting in not so many words, I've got the quote later, but in not so many words, they're protecting the US dollar as we know it in the fiat dollar by applying it onto stablecoin rails. That's wholly different than a central bank digital currency. So as I've said forever, or for certainly a long time, if you're working the trifecta, assets, cash flow, USDT, your USDC, you're able to own the most powerful hegemonic fiat money in the fiat currency in the world, which at this stage isn't going to change anytime soon. But with what's going on, in fact, today over in Saudi Arabia, it's not just talking about potential peace in terms of ceasefires between Ukraine and Russia. What they're really there for is to rebalance the dynamic, because Russia's done a very good job in protecting itself and its economy through the BRICS nations. And America knows that. America's debt to GDP is knocking on 100%. Put in the chat if you know what the debt to GDP is for the Russian country. That tells you everything you need to know with regards to where things are headed. And Europe needs to make its mind up what it's doing in there. And I don't think it can, because it's not got any head. So we'll find out. So owning Bitcoin and USDT or stable coins is an absolute fundamental. One is equity, one is yield. Done that for years, and you're just about to find that accelerates now very, very quickly, especially on the Bitcoin side, as it becomes part of the fabric of how global economics works, which is ironic after all these years, I might say. Altcoins were a different animal. If you've got the fortitude and resilience and a constitution to work with altcoin companies, good for you. And if you have decided to embark on that journey, maybe unwittingly or not knowing exactly how it works, then just keep going. You've just got to keep going. If the entity is still there and still exists as a reality, and there's people behind the scenes with much, much more brains and much more smarter than we are, who are making those things a reality in whatever industry sector you've decided to get involved with, you have a duty of care to yourself to keep going, which is hopefully why you turn up to these calls every week. What do we do with all that? Well, we just take the equity and the yield, or the combined equity and yield if you're working with altcoins, and we just take the tailwinds, some of which I've just alluded to there. We'll go into more detail in a minute. We just take the tailwinds, we look for our assets to accrue in value, which gives us equity. We can then collateralize the equity and push that equity into cash flow at de-risk. So we de-risk the cash. If you're not understanding how to de-risk yet through particular Bitcoin, then speak to the DBM coaches and understand how to de-risk. Understand what it takes not to keep exposing your cash, not to keep throwing fresh fiat into your business. You need to use your balance sheet to fund your business. And then build it up to a critical mass that allows you to take 80% back to keep building up your balance sheet, collateralize, leverage your balance sheet, and put that back into cash flows that work. And whatever you've decided to get involved with, you have to keep going with it. Whatever the challenges are, whatever the emotions of other people, you have to keep focused. If it still exists, it's still there as an entity, you have to help it finish. You have to help it become what it stated it wanted to be the day you got involved. You can't buy success in this space. You have to keep moving. You have to keep supporting each other and helping each other. And at the end of it all, the big irony is we're now able to own individually, privately, what the governments of the world are using to reduce their own debts of balances. Think about that. Literally, in this past 3 days, we now own what governments are just starting to use to reduce their balance of payments and their debt. Think about that. That's quite a refreshing thing, isn't it? That's quite an amazing thing to be part of. Why is that amazing? Well, if you're on the DBM blockchain asset course over the past 5 years, you'll recognize this. If you read the chapter in the book we wrote back in 2022 called Collaboration, you'll recognize this. We've been talking about this forever. It's not difficult to understand. In fact, it's crazy that more people don't understand it, let alone do something about it. How close are you to the money supply? Well, if you're going to keep on the extremities, you're going to get what you get. You're going to get less and less and less of the effects of that currency supply. You're going to put most energy in case you haven't noticed. That's what if you have a job, that's what you do. You put most of the energy in and you get less of the benefit. The closer you get to the center, the more you're able to take advantage of the thick end of the currency benefit with less energy, less physical outlet. Yeah. So that's been the role of owning gold and now owning Bitcoin. That's how it works. Your job is to just keep accruing that and moving forwards. And if you want to do it faster, then you find ways to own more Bitcoin and more gold faster, which means you get out there and work harder, or you get out there and work smarter. And whatever you've decided to get involved with, you keep going. You don't just give up, because you're just going to go rubber banding straight out to the extremities of this again, like a centrifuge, just push to the side. You've got to fight to stay in the middle. And unbelievably, we now find ourselves front running. If you've been a dollar cost averaging Bitcoin over the past few years, you've now front run the government policy. Have you ever done that in your life? Have you ever been in front of government policy in your life? Or business policy, banking policy, institutional policy? Have you ever done that in your life? If you have, well done. If you've never done it, but you've been owning Bitcoin for the past few years, and maybe gold as well, then you've just done it literally at the start of 2025. It's just happened. It's never been more important to own your little piece of the money supply, just a little piece, and then just let the rest become. Let the rest become. But whatever you do, never, ever sell. Ever. We all need to smash the jar every now and again. The up movie. Resist, resist, resist. Do anything but get out there and do whatever it takes to live your life and run your life. But don't sell your core assets, especially Bitcoin. Very, very interesting, right? So there's so much to talk about. I mean, I've had to extend this into 2 slides. There's that much to talk about. One is macroeconomic and the other one is geopolitical. There's so much going on. I mean, it's really difficult to keep up with, but it's great fun. It's great fun because, you know, most people, if you think about it, over the past 40, 50 years of your life, you've been a victim to the consequences of macro and geopolitical activities. Yeah, mainly. If something's happened, then it's caused something to happen. Up and down inflation, up and down interest rates. Most of it is death by 1,000 cuts. Most people just live for the weekend, live for the football game, live to watch the next movie, live to, you know, they keep very, very close and tight. And I get that. So sometimes I look at life and think, you know what, wouldn't it be so simple just to roll with it? Just have a 9 to 5. It's so simple. Yeah. But then you look at the reality of it, and you might have friends and family sat around you who, you know, they don't say much, but you can see the oppression. You can see you know, they're just either deluded, because it's easier to be deluded, or they just don't want to face this stuff. And I can't really blame them, honestly. But when you do open the genie bottle and you start to go down the road of determining, which is self-determination, that you want to be understanding what it is to be closer to the money supply, then you just open yourself up to a whole world of revelation, which when you do it long enough and you're sophisticated enough to keep on top of it and not let it get at you, then you're able to start to make things happen. And that's focusing on what you can affect. And then every now and again, you'll get a big break. You'll get a big burst. And this is exactly what's happening right now. Yeah. It'll pull you to pieces. You'll be looking at prices. You'll be thinking, hang on a minute, why has Bitcoin done that and now it's there? And how come this is happening? Once you understand it, then you realize the big pictures. So my job is to try and break it down for my own business as well as everybody else, if we can be of any service or value whatsoever. But nothing's really changed when you look at the fundamentals, which is what you really need to be looking at, fly above the canopy. But little steps, or sometimes very big steps, give us the ability to predict the future. So just very, very, I can't put everything in these calls, but just to give you the headlines I picked up on just in this past week, if you want to listen to prior weeks where all this has led to, then they're all on YouTube. Hit the bell, give us a like if you're on YouTube, by the way, you're very welcome. And if you're listening to this over in the Academy, just press us a like, drop us some comments. We appreciate the feedback. So just last Friday, well, it was Thursday, actually, the executive order got signed, okay, for a Bitcoin strategic reserve. And then on Friday, they had the US Crypto Summit, which was all about a digital asset strategy, including stablecoin rails. That's something we didn't see coming, but now we know. That's certainly what Scott Bessent is looking at, the Treasury guy. So that is very big, because as you'll see from the quote down the bottom, the US will remain the dominant reserve currency. That's their goal. Well, we'll find out, because Russia has basically won that war. The proxy war that's been going on in Ukraine will end very quickly now. And it will be a case of, right, where do we sit? Because Russia's done a very, very strong job with the southern hemisphere countries, the BRICS nations, etc. And it's frightened the US to death. Yeah, they've let it go too long. They've let or maybe I'm touching too much on the geopolitical side, but they've let the weapons network, the US weapons network, just take too much advantage of too many countries for too long. In fact, they're now trying to push that across to Europe, right? And get back in again with Russia, which is what they're going to do. So very, very interesting what Bessent's talking about there. But either way, I wouldn't bet against the US. If they keep holding that position and use stablecoin rails to do that, you've got to recognize that's huge for Bitcoin, because among other stables, Tether is 70%, just amongst other stables, 70% of the market share is Tether, and 15% of Tether's profits go into buy Bitcoin. So they've been building Bitcoin reserves in Tether for years, and the US know it, and it's built on the US dollar. So think about that. They're going straight to solution. They're not bothering with CBDCs. They're not messing about. They're going to go straight in. And now what they've got to do is find a way to make sure that the oil prices stay within the control of the US dollar, which is what they're doing today in Saudi Arabia. So lots of things spun off the summit on Friday. Then very quickly on Saturday, we got the news that the US banks can now custody Bitcoin legally on behalf of their customers. Just like that, done. Now that'll take time. A lot of the banks don't understand what we're talking about here, in my opinion, but it will roll in and start to take shape. Okay. So what you're getting with the Bitcoin price right now is quite a bit of, insider stuff going on, where they're absorbing, they're taking out all the weak hands. There's a lot of retail people in Bitcoin. Don't forget that. They don't understand any of this. So they're just going to buy up high, or buying up at $100,000, $105,000. They're buying up, trying to get rich quick. They're just being completely wiped out right now because they don't get it. Don't forget where Bitcoin was just 6 or 7 months ago. Yeah. Keep that perspective in mind. Don't look at 108. Look at where it was before the Trump election, and then work the trajectory out from that. Everything else, that big bump, is purely or mainly a lot of speculation. So just be aware of that and don't panic. Just don't sell whatever you do. Now in the yellow oblong there, this is what this is the formula basically that's leading to the price. And this is what you need to maybe print off and stick on your office wall just for the next few months, if not the next few years. It's all about the M2 money supply. You've heard us talk about this before. So this chart's on the left here. You might not be able to see it in detail, but this red area here is all the way from mid-23 to the mid-24. All right. And it's basically the devaluing of the balance sheet on the Fed. Predominantly. Okay. You can see what happened before that. This is COVID and all the stuff going on. Yeah, we know what they did there, and we know what they did prior to this, all the way back to 2011 when they first started to QE. So, quantitative easing in green, quantitative tightening in red. Just as we head here now from March 2024 all the way up to the end of 2024, where we are today, actually March 2025. Look at the shift. Now, why is that happening? And why will that accelerate? And is accelerating. Remember, M2 works 3 months ahead. This shows it in detail here. The blue line is Bitcoin price. The green line is global money supply. And we can always see M2 3 months ahead. So we're here at the moment. You can see my cursor. Bitcoin's doing what it does. Money supply is shot up. And it will go even further now, especially what's going on in Europe. And remember, the euro is based on the US dollar. So the blue line, we expect to go flying upwards. That's where we're getting our 200, 250 Bitcoin predictions from. You've got to lean into that and use that to create the equity, to create the collateral, to create the cash flow. Now, work your business 6 to 12 months into the future. Think about how you're going to be doing that. Think about the best products and best projects you can possibly find to convert collateral into cash flow. And practice now. Get yourself involved now. Don't go all in. Don't go shoving everything in. You can see what can happen when projects have to reset or adjust or slightly, go through different audits and whatever has to happen to keep them alive and healthy. It's no problem. It's just part of the job. It's just what it is. Not an issue. Just expect that. But when you can see what's going on with them too, you can start to think about, okay, I've got my little reserve here of Bitcoin, whatever size you are, you just need to hold. Because why is it going to go faster and stronger? Well, because we've got Bitcoin standard, sovereign Bitcoin reserves. Didn't have that until just a few weeks ago. Just didn't have the idea that Bitcoin would be held on sovereign wealth funds. Just didn't have any clue that was going to take place. Bang, here it is. Don't forget where you've been and a key perspective on where we are. It's very, very powerful. Over the counter. Over the counter is running out very, very, very quickly. So if they can't go OTC, if they can't buy off the big over the counter deals, where do you think they're going to buy the Bitcoin from? They can only go to the open exchanges, right? And the exchange reserves are running out very, very quickly. So you've got M2 money supply, you've got Bitcoin, sovereign wealth funds, plus OTC, plus exchange reserves running out very quickly of Bitcoin I'm talking about here, plus global demand, except EU, equals price. Now, what more do we need to know? If you were going to map out a decade of sovereign wealth fund for yourself, if you were going to map out and you had all this intelligence and awareness and sophistication, and you were going to put a formula down as to the probabilities of incredible demand side pressure on an asset that falls in supply naturally anyway, but is also limited in its supply because of the nature of how many people want to own it. If you were going to set down to whether it's Bitcoin, I don't care whether it's anything, would you suggest that is a very powerful formula on which you should be doubling down on Bitcoin? If you've got any ambition to go and build a balance sheet, you decide. You decide. Now, the people front running it, such as our friend Michael Saylor, quote, "The strategic Bitcoin reserve is a turning point in the financial and geopolitical landscape of the 21st century. That is undeniable now." He is heavily, heavily recommending to the US government that they go out there and acquire 25% of the currently available Bitcoin supply. That just goes all the way back to OTC, goes all the way back to exchange reserves. They have nowhere else to acquire it from. They've obviously, they've confiscated. Yeah, they reckon $200 billion worth, but half of that's going back to the creditors anyway. But just as I didn't mention earlier, by the way, that's about $18 billion of supply that's been removed. It's 200,000 Bitcoin. So it's 200,000 Bitcoins. So it's about $18 billion of supply removed because they're not going to sell that now. They're not doing what the Germans have done. The US owns the most, the UK owns, China owns the second most, and the UK owns the third most Bitcoin from confiscation. And China did their own mining as well up until recently. And we'll go back to mining it very quickly now that this is happening. So there's going to be a lot of miners. Look at what's happening in Bhutan. They're clever. They've got the biggest Bitcoin ownership ratio per capita because they're actually using the water, their own hydroelectricity to mine Bitcoin. Think about that. There's 66 million Bitcoin owned by the UK government. If they had any sense, they'd be putting that into a reserve and giving every household in the country some benefit from that. Have they got the imagination or the smarts to do that? Or are they being nefarious? You decide. Either way, Mike Saylor's helping the whole thing to become a formula on which nation states can, first of all, begin to eradicate deficit, and secondly, push themselves to a place whereby, hopefully, for the first time in many, many, many years, if ever, they can start to put direct net benefits to their populations as opposed to eradicating people's purchasing power, as has been going on for the past 50 years. So a Bitcoin to 2 trillion market cap is not difficult to do now. We're already at 1.6. And then big things happen at that level. Yeah, you can't eradicate a $2 trillion asset class. Yeah, not that you could eradicate Bitcoin anyway, but these people who are still out there, 10 years behind, still not understanding what this asset class is about. They've still got control of the narrative, unfortunately, to most of the left-wing media. But the whole idea is that more and more and more people do what you guys are doing, which is to recognize this and start to front run. That's the whole point. So financial singularity is happening in real time. You either front run it now or you become exit liquidity. That goes back to what I said before about money supply and building extremities. You've always been at exit liquidity. You've always been the person at the end of the queue. Now you've got to put yourself right in the front and literally front run what's going on with macroeconomics. Okay, very, very big topics. I appreciate that. That's why we record. Listen to this again at your own leisure. Now, geopoliticals needs, unfortunately, we need to bring the geopolitical levels in now. Or fortunately, which way we want to look at it. We've always spoken about this, sort of kept it under the radar a bit because it's not been that important to us because the governments were doing what the governments do and it was always ignorance or complicity. But now it's becoming almost aggravating to observe what's going on. Because when you study this and you look under the hood and you see the shenanigans, whichever way they're coming from, and it's not really left or right politics, to be honest with you, it's globalist politics. It's globalist politics. And you've just got to try and anticipate where the politics of your country are and how that's all being combined together. It's one big pot at the end of the day. You can see it going on right in front of our eyes now, right now. Literally, we'll be looking at the feedback we're going to get from Russia, US, Ukraine meetings in Saudi Arabia today. And because of the oil, because of the need for collaboration, because they're going to hang the Europeans out to dry, because the Europeans haven't been smart enough to spot this, in my humble opinion, then you're going to find an era of collaboration going on. And that's a very big deal for us, especially with one of the projects we operate in, because we need to get those sanctions dissolved. Whether we like it or not, we've found ourselves embroiled inside sanctions in this past 12 to 18 months. That needs to dissolve. And the only way that's going to dissolve is when the US and Russian decision makers get together and start to dissolve what it is through brokerage and trade agreements. Those trade agreements are needed because the Europeans need the gas from Russia, need much cheaper gas, and the US need to get the oil prices where they need to get them in order to maintain dollar hegemony. Yeah, they need that $50 a barrel. The Saudis are not happy about that, and because the Saudis weren't happy with what's going on over in Middle Eastern politics over the past 5 years. So they've caused the US a few problems. And the US has tried to hit them over the head with the military complex hammer, all through, obviously, what's going on in Israel. But I think now they're finding out that they're not going to get anywhere with that because Russia's done such a good job in bringing the BRICS together. Yeah. Russian debt to GDP is less than 22%. They won't tell you that in the propaganda that we get through Western media. But that's what the US are fighting against. And they know it. Okay? But while they're on the journey towards that, the EU have been daft enough to inherit the US dollar military complex. And now they're saber rattling, which, to be honest, if you think about it, is necessary because NATO, well, it's absolutely needed, and nobody should suggest that NATO should be dissolved by any means. We have to respect what we inherited after many people died based on the fact of the last wars. But at the same time, the US, Europe have got very lethargic with that. Very lethargic with it. And the US allowed them to do so because it suited them in the military complex. That's just shifted. Whether that's good, bad, or indifferent, you'll have to decide for yourself. But at the end of the day, what it means for us on a macro level is the printer has just been switched on, even in Germany, which is unprecedented. So printer goes brr, M2 money supply, all based on US dollars. Don't forget, the euro is simply a secondary currency, just as all other currencies are, to the dollar. So it all has the same effect that I was talking about before on the macroeconomics level. And it will be what it will be. And at the end of the day, if it means Europe's more secure and can look after itself without leaning on, Uncle Sam, then it will be what it will be. But the consequences of that in the meantime are they're going to keep driving to pretend they're saving democracy. Right? And that is consequential because it leads to continuation of war. That's what the military complex is. So we'll see what it is. But the bigger point is what's going on with regards to Russia and the US. Whatever people's opinions around that, whatever people's opinions of Trump or Putin, it's not really that relevant. What's relevant is the countries get on and start to trade properly and rebalance where things need to be. That's what we're looking at, and it all has massive consequences for gold, silver, and Bitcoin. All right, so the EU are prioritizing war. That's just the way it needs to be at the moment. They're prioritizing over sensible trade, cheaper energy, and prosperity. Right? They're basically sacrificing the European middle class for a need to reset the way that the global politics works. Yeah, and that's just where we're at. So EU populations are protesting. Again, you won't see it on the mainstream media, but a lot of protests going on right now in France and Hungary, etc. A lot of people do understand this. They're not going to send their men to wars, okay, based on this shenanigans when it's not necessary. Countries can collaborate and be together. There's no need for this. We know this. It's just the way that these financial systems have worked, certainly since the Second World War. Anyway, in the meantime, China, Russia, US will run ahead of the EU. They'll have a stronger, partially backed BTC economies. Yeah. And they're they're bringing back something that was happening before the Fed, external tax revenues from tariff models. And again, it frightens people to death. Yeah, we've got ourselves a new, very, very left-leaning president over in Canada. Yeah, Carney was part of don't forget, he was the head of the Bank of England for many, many years. So, they just don't have this in them. They keep everything the way they think it needs to be kept by keeping the money printer going. Whereas they're now getting this other model coming in, which is based on sound money and based on tariff models, whereby they're going to bring in significant revenues from external tax revenue services, not internal tax revenue services. And we heard Trump today on the plane. It's all hubris. We know what he's like. He's all a big showman, and he tries to sell ahead. Yeah, he always tries to just manifest it into existence by pure weight and enthusiasm. We know it doesn't work like that, but that's what he's saying. You don't worry. You're going to have enough money. You don't have to worry about. All that is being driven by the external tariff models. Now we'll see, won't we? We'll see. Again, just keep your eye on the prize. What that means to us in terms of what's going on with the assets that we're interested in, particularly Bitcoin. So manufacturing onshoring, affordable energy returns, they're quashing this pipe dream that you can get as much affordable energy out of, renewables. I know that's a contentious issue, but I agree it needs to be there, but it can't happen as quick as what they thought they were doing just because they've got some idea. They need to bring cheap energy back. They need to bring manufacturing and jobs back onshore. And the big elephant in the room is AI. AI is a big one. Big one. And the word on the street is the US needs to stop fighting. It needs to, which is what it's doing, or trying to do. It's working towards self-interest, which, again, people have opinions on. And all the while, China are doing exactly the same thing in their way and beating them at the AI race. Look at what came out yesterday. So all these things combined are part of the geopolitical footprints that we follow, and it all leads in the end to us as individuals being able to get ahead, especially the last point when you look at what is going on with the ECB and the EU. She was very clear on this on Friday. Our friend Lagarde, she's got absolute focus on bringing in central bank digital currencies by the end of 2025 into the EU. And she's confident that's going to get passed through Congress. Right? Now, the question for us is, knowing what we know, will we ever use that? Would we ever need to? So it's sort of refreshing now that we're not going to get hamstrung and pulled by the nose into CBDCs like we thought we were, because we're connected with another globally interconnected interface called Bitcoin. Yeah. And you only need to get ahead a little bit for that to give you enough leverage for you not to worry about how ordinary people are interfacing, buying loaves of bread and whatnot. Yeah. We use a CBD system. We don't get used by it. But I'm not sure how they're going to get through it, to be honest with you. But she seems confident. That's what she was saying last Friday. If you were listening to what's going on, I guess we'll find out. But all of a sudden, the Europeans are running one way and everybody else is running the other. I guess we'll find out what goes on next, won't we? So big stuff. I know, appreciate that, but that's what it's all about. If you want to get this broken down into step by step, especially if you're running a number of different industries in your cash flowing business and you want to get a little bit more weekly helped focus on what it takes to keep accruing the money supply, that's what the Academy is for. We're more than happy to work with you. In fact, we very much look forward to doing so. We'll see you on the next call.